Welcome, Pramod. Thank you for being with us today. The discussion is of our GST survey response and looking forward to this interaction. Pramod Jain is the head of tax of Flipkart, a very exciting organization and a very interesting organization from a GST perspective. And Pramod, personally, I know you've been involved in this journey of GST not only after GST, but prior to GST as well. Thank you again for being with us.
Thank you, Mahesh, for having me for the show. And it's always a pleasure to talk to you.
Thanks again. First question, 90% of our respondents have welcomed GST. Are you surprised? Are you pleasantly surprised? What's your take on an overall basis as well as for the sector that you come from?
I'm surprised why it should not have been more than 90%, Mahesh. I would have thought it should have been near 100%, but 90 is also a good response.
Excellent. And what would the reasons be for you to believe that?
If I have to compare the pre-GST regime with the GST regime, significant amount of changes have happened for our trade industry to grow. If I have to look at four big events, the first one is that there is a standard and flat rate across all states on the same commodity, as against having different rates on different commodities across states in the past. Second would be all paper tax filings have gone, so everything is now digital filing, online filing. Third one will be the C forms, F forms, waybill, road permits, and many other host of paperwork that industry had to do. They are no longer there and they are become part of the history. And the fourth and the most significant one probably is that there is complete elimination of dual taxation, what we used to see in software, where there used to be a VAT also and service tax also, and industry had to fight their way. So all these four things have been big sea changes, what we have seen in the last 4 years.
It's interesting you say that because our survey also says that the supply chain optimization has been a big relief as well as digitization, which brings me to the next point that the respondents, the two top points that caught my attention as highlights of what the government has done well is 80% feel digitization has been good, and almost 60% feel the engagement and proactive approach by the GST administration, whether it's a center and state, has been an outstanding one. What's your take on that, Pramod?
Yeah, so certainly, Mahesh, in addition to technology being the backbone of entire GST implementation, if I have to see the whole engagement by the state governments and by the central government with the industry on what challenges they are facing. So the state governments and central government both have been in a very listening mode and very quick action mode. And there can be multiple examples, and we hope this continuous engagement with the industry continues, just to make it, even a bigger success than what we have seen over the last 5 years.
No, that's true. And I think the entire framework of how the GST Council decision making is taking place, which has the law committee and the fitment committee, where perhaps most of the states are represented there. This nice balance of center and the state collaborating together has resulted in multiple touch points to engage with one's concerns from industry. And I too look forward to that engagement going forward. Coming to the last but not the least important point where we asked our respondents, what do they expect as a focus area? Because now GST at 5 is a mature law. The tax collections has been on a consistent record high. I think 2 points that stood out in our survey was a recommendation that the government could focus on unlocking of working capital, and the second one being eliminating some of the input tax credit restrictions. I'll be keen to hear your take on these two aspects, and feel free to add on the other points as well, which you may have observed in our report.
Sure, Mahesh. So this unblocking of input tax credits certainly is a huge problem. And this is what probably in next couple of years or next few quarters of the government can look at addressing that. Some of the thoughts that I would have for unblocking the working capital, one could be if the CGST and IGST, which both are central levies, they could be allowed to be transferred from one state to another. And both these being central levies just simply means that it's transfer of money from one pocket to another pocket. Second would be if the government could consider IGST on imports and the domestic reverse charge, if that could be paid through input tax credit. And third one could be look at, can the input tax credit, which is accumulated in the hands of the industry, be allowed to be traded and transferred, and the input tax credit which has come to a company by way of e-invoices, if that only could be allowed to be transferred and traded through tradable scripts, that could again be a big move for industry to unblock working capital.
I think that the first point that you did say about transfer of the credit, it will enhance the one nation, one tax experience. The reverse charge part is also aligned to best international practices. and the unlocking of credit through scripts would be an innovative and way where the government has been supporting putting in money where for infrastructure, etc., expansion. Look, let's hope we get some result on the working capital front. Back to you. You were talking about the next point on input tax credit restrictions.
And a second one, yeah, so on the restrictions on the input tax credit, so the whole concept behind GST was that it should be a seamless credit flow and there should not be any artificial restrictions or barriers to availing the input tax credit. Now, as the GST law has matured over the last 5 years, maybe just two suggestions here. One is for the hospitality industry, where some of the personal services like transportation, catering, and employee insurance, they are the GST credit on those are not allowed if that can be unlocked and allowed for the industry. And second big one is the government is looking at building up more infrastructure in the country, getting more manufacturing in, and as can be seen through incentives like PLI and all. So today the GST credit that gets accumulated because of construction of immovable properties like factories, hotels, warehouses, logistics parks and all, that is not allowed as a credit, and that increases the cost of construction by 8 to 10%, and which gets transferred by way of enhanced rentals. So if these two credits can be lifted, one, it will allow seamless credit of GST, and second will be reducing the cost of doing business, in addition to creating more ease of doing business in India.
Excellent. I couldn't agree more. I think these are excellent suggestions, and the way you've articulated is aligned to a lot of what our respondents say. Thank you again, Pramod, for being with us, and look forward to the continued engagement with you. Thanks again. Bye-bye.
Thank you. Thank you, Mahesh.